Yo guys, welcome back to Cryptoria. So I'm going to be covering dollar cost averaging, but before I do, I'd appreciate if you like, subscribe and turn on bell notifications so you know when I upload. And with that being said, let's get into this video. So what is dollar cost averaging? So I have jumped onto Investopedia where it does highlight what it is. So dollar cost averaging DCA is an investment strategy in which an investor divides up the total amount to be invested across periodic purchases of a target asset in an effort to reduce the impact of volatility on the overall purchase. The purchases occur regardless of the asset's price and at regular intervals. In effect, this strategy removes much of the detailed work of attempting to time the market in order to make purchases of equities at the best prices. Dollar cost averaging is also known as a constant plan dollar. So just going over it quickly, so the key takeaways I did mention already. Dollar cost averaging refers to the practice of dividing investment of an equity up to multiple smaller investments of equal amounts spaced out over regular intervals. The goal of dollar cost averaging is to reduce the overall impact of volatility on the price of a target asset, as the price will likely vary each time one of the periodic investment is made. The investment is not as highly subject to volatility. Dollar cost averaging aims to avoid making the mistake of making one lump sum investment that is poorly timed with regard to asset pricing. So that is pretty much what it is. So just go over this as well. As you guys can see, this chart does demonstrate how everything works. So you can see here the amount of pays that you're doing, so 10 paid days. So this might be per month, per bi-monthly, or per couple of months, per week, or whatever your planned strategy is, what the actual fund is. So as you guys can see, this one's the S&P 500 index fund, and this is the price at where it is per month or per week or wherever it is, the amount of money you're going to be investing per month. So as you guys can see, for that first month, the price of S&P 500 is at $10. You're putting in $50. The shares you bought is $5. The shares you own is $5, and the total value is $50, and so on. But I will be giving you a demonstration on crypto right now. So guys, comparing it to the table I just showed you on the S&P 500 index fund, I have made an Excel spreadsheet here for dollar cost averaging for crypto. So as you guys can see on the left hand column, I did highlight here the amount of paydays I'm doing. So I did put a total of 10 paid days. So this could be, as I said, per week or per 2 weeks, per month. So just for this purpose, I'm going to say per month. So per month, I'm putting in a contribution for ADA $50 per month. So the price I bought at on that month will be $135. The next month might be $120. The next month after that might be $150, and so on. So that is the price per ADA on that month. So per month is going to be that price. So on that month, I'm going to be getting around 37 ADA tokens for that $50 at that price over there. So that's how much I owned, and that's how much the total value is on that month. The next month the price might go down, so therefore I'm going to be able to get more ADA for a cheaper price. So I'll be able to get 41 ADA tokens. So therefore I'll be able to add up what I got here and here in order to get this amount. So at the end of month 2, I'll be able to have 78.70 ADA tokens. So therefore my total value is going to be $94.44, and so on. So as you guys can see, I had a total of $500 worth of ADA tokens, and I was able to buy around 334 ADA tokens, and therefore I'll be able to own 785 ADA tokens in total. Therefore my total value of ADA will be around $285. So as you guys can see, that by the end of 10 months, I'll be able to have a value of around $785 roughly. This is just a very rough table. As you guys know, there is a P&L, so profit and loss. So this is a rough insight on how this works. This just, as you guys can see, dollar cost averaging the whole way throughout each month, regardless of what the price is, guys. That is what the whole point of this is. Another quote here as well, guys, from Warren Buffett: be fearful when others are greedy, and be greedy when others are fearful. So it's just a good quote as well. Just have it on your back of your mind. So guys, another way of actually dollar cost averaging is actually looking at the amount of percentage difference that is occurring, whether it is 24 hours or per month or per week or so on, there is an actual way of actually utilizing this as well. So as you guys can see, I have jumped onto CoinMarketCap. There is a lot of other websites and softwares you can use which actually helps with this as well. But as you guys can see over here in CoinMarketCap, it's very easy. It does say the amount of percentage difference over the last 24 hours. So there is a whole bunch here. So if I did actually adjust this and click on this, does tell you which one's the greatest gains of the last 24 hours and which one is the greatest losses as well. So as you guys can see, for example, Axie Infinity AXS is actually down 8.71%. So if you do want to take this on, there is a lot of ways where you could actually, utilize this best for you. So a lot of people actually does it if it's per 5%, they might want to buy in then. If it's 10%, they might want to buy in then. 20%, 30%, 50%, and so on. It depends on how much you actually want to keep it for the long term as well, guys. If you want to keep it for long term, fair enough, you might even buy it even if it's like a 2% drop and stuff like that. But I will be showing a best method for this as well, but this is just an insight of what it is. So it'll be good as well. If you can see as well, there's loads of other coins as well which it does as well. So for example, XRP is down 1.7% actually. So if you don't want to buy it then, you could buy it then, or you could wait for a further drop as well. This is over the last 24 hours as well, guys, just to be aware. There is other ways we could adjust this to maybe the last 27 days or a month and so on. That is just one other way as well, guys. So guys, I will be jumping on some price analysis now. So guys, the final way in which I think the best way of dollar cost averaging is actually doing on the market dips. As you know, a lot of people say buy it during the dip, buy it during the dip. This is probably the best way in terms of buying during the dip. So it is best to learn how to actually do the Fibonacci retracement as well. It's just one of the stronger methods of actually working and succeeding. So as you guys can see, I have jumped onto the Bitcoin monthly time frame. So another thing as well, if you do want to buy the dips, it is best to do on a higher time frame, just because on hourly it is very volatile, same with the other lower time frames as well. So I have jumped onto the monthly. As you guys can see, I have drawn out this Fibonacci retracement, and it has done a perfect retracement all the way back down to 61.8 level, and has been creating a level of support around that level here, around that $35,000 mark. As you guys can see, has created that level of support now and has seemed to be maintaining that level. So as you guys can see, from the high to around that 38.2 level, it was a 30% drop, and to the 50% level it was around 40% drop, and to the 61.8 is a 51% drop. So you guys can see you're able to buy here, you're about to buy here, you're able to buy here. Fair enough, you've bought it here, you're still at a loss at the moment, but it's better than buying it over here. If you bought it here, you would have been at a major loss right now compared to where you buy here or buy here, buy here. If you bought it at a 51% drop at the moment, you'll be in profit right now. As you guys can see, you would have been up around 20% right now. But that is just another way of looking at it as well. Even jumping onto another way as well, another way of doing it is using psychological levels. So I've marked out these levels here, so 50,000, 40,000 and 30,000. Psychological levels in a short term is actually just levels which is just whole numbers and just easy to look at as well, and it just gives you an insight of a previous history of where the price was actually hitting. So that is just brief, but if you do want to learn about it, go ahead and learn about it, guys. So in terms of psychological levels, say guys the price was around here, you shouldn't buy it at a peak, especially because you can see here there's no actual data to the left, unless, as I said, guys, you're holding this for a very long term. You could fair enough, and buy it at a long-term purchase or price. But if you want to buy it around 50,000, as you guys can see, fair enough, it did drop, but it's better than buying it at here where you would have been at a major loss. 40,000, well, as you guys can see, it's been maintained that level, so you would have been at a profit right now. If you bought at 30,000, as you guys can see, you would have been at a huge profit right now, up $10,000 in fact, where price, if you bought price over here. But those are just two methods in terms of buying it as well, guys. That's not the two methods. I'm pretty sure there's loads of other ways of actually dollar cost averaging and buying these dips as well, but these are the three methods in which I believe are the best ways of buying as well, rather than you guys getting completely burned and buying at the top and buying at the peak and stuff like that, where people do encouraging you buying just because they expect price to go bullish and bullish and bullish. This is the best way. I always tell you guys never to buy at the top, just because there's no data to the left. Fair enough, if price goes up, fair enough, you might gain a couple of percentage back, but it's best to wait for these dips, and these dips are the best way, rather than buying over here. You could have just bought it here when that 50% retracement came back down. So those are the ways in which to buy these dips and dollar cost averaging as well, guys. Hopefully that all makes sense to you as well. Make sure you smash that like button, subscribe, and turn on bell notification for all future videos. And with that being said, I'll catch you guys in the next video.